You ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Wednesday, 24th day of March, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. In about 30 seconds, you'll be registered, and you won't have to register again. When you register that way, a couple things are set in motion. Number one, you're going to get an email every day right before the show starts to remind you the show's about to start. And in that email is your link for the one-click access. Just click it, delete the email, you're off to the races. Now, when you join that way, you also have access to the chat box so that you can ask questions and participate in the discussion. However, there will be days you're out of the office away from your desktop. Just point any internet connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You just want to have access to the chat box. We also stream live during this broadcast on our YouTube channel, youtube.com/CFRN. We not only stream live on our YouTube channel, but we archive each daily show at youtube.com/CFRN. So anytime you miss a daily show, or maybe you want to see what we were talking about a week ago, a month ago, a year ago, 2 years ago, we have over 1,600 daily episodes archived at youtube.com/CFRN. The most interesting part of scrolling back a day, a week, a month, a year, the prices that we'll be discussing on each of those shows are relevant to the day that we were discussing them. But the strategy, the indicators, the underlying principles, everything that we are, everything that we teach hasn't changed. It hasn't changed. We're still talking about the same strategy, the same principles. Price still flows the same way today that it flowed when the market started. And it's how price will continue to flow as long as the markets continue to exist in their current incarnation. So, if you're new to CFRN, you don't have that connective history. So many of our members have been with us since we launched in 2005. We started out as a daily podcast, and then we became more like a TV show. I don't know. We added video. Since we now all of those podcasts are still out there in pod space, but it was, I think, 2011 when we started adding the daily video. In other words, when we talk about a chart, you can actually see the chart. If you happen to be listening to this particular broadcast after the fact via your favorite podcast player, iTunes, Spotify, iHeartRadio, wherever pods are cast, if you aren't driving or operating heavy machinery and you want to see the charts as well as hear us discuss the charts, hit pause on your podcast player, hop over to youtube.com/CFRN, and pick the corresponding date, click it. You'll have the benefit of both audio and video. And while you're there, hit the subscribe button, okay? For two reasons. One, it helps more people find us, and number two, you'll be notified anytime we go live with breaking news, any type of unscheduled broadcast. Just something big happens and we go live to tell you all about it, you'll be notified. Okay? So with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, for your grace. We thank you for this broadcast and your purpose for it. We know that when we gather together in your name, you always have a divine agenda. That even when we have done what you've asked, we know that the results are often so much greater than we could ever have imagined. Even in failed attempts, you blow us away with your faithfulness to provide what we need. Our prayer today is that your will be done through this broadcast. For those who are here live in real time, and for those who will encounter this broadcast a week, a month, a year from now, we pray, God, that you would take what we have prepared and multiply our efforts as only you can. Steer our intentions to align with your righteous will. Remind us of your faithful provision when our efforts fail us or fall short. May all glory go to you when we reach the finish line and climb over the benchmarks. Blanket us with your peace today. Keep us physically safe and guard our hearts, our minds. Keep us away from pride and selfishness. Keep love at the forefront of our minds today and the guiding light for all we set out to accomplish and celebrate. In Jesus' name we pray. Amen. Amen. Well, happy Wednesday. Let me give you the numbers from around the world. The cash markets, or the indices as they're called. Starting here in the U.S., the Dow is up 312 points, almost 1%. The NASDAQ is down 51. S&P 500 up 23. And the Russell 2000 up 13.5. The closest thing to a mover and shaker is the Dow, which up 312 points. That's just shy of 1%. In the commodity basket, crude oil up $2.85. Now, what a volatile market this has been of late. Trading 60.61 last. That's a gain of almost 5%. Gold up $7.10, trading 17.3220 last. Silver up 4 cents, trading 25.27 last. In the Asian markets at the close, the Nikkei down 590 points, a little over 2%. The Shanghai down 44, 1.25%. And the Hang Seng down 579 points. That's a drop of just over 2%. And in the European markets at the close, the FTSE posted a daily gain of 15 points. The DAX dropped 69, and the CAC fell 1.5. No movers and no shakers. That gives us a red day in Asia, a mixed day in the UK, and once again, thanks to the NASDAQ, it is a mixed Radio Wednesday here in the US of A. So with that, we can go to Michael and get a recap of what happened this morning in the live training room.
Yes.
If you are ready, sir.
I am ready. Wow. Oops. I hit the catwalk. Hang on. Here we go.
Yep, take your time. Okie doke. I can see your screen. I can see your charts. You are locked and loaded. Take it away.
Excellent. Thank you. Here we go. All right. Good afternoon, everyone. Today is Wednesday, the 24th day of March, 2021. Today, well, first, if you've not taken a free trial with us and you want to take a free trial with us, go to the homepage at cfrn.net. Right around the homepage, it says free 5-day trial, no credit card required. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, you have all kinds of information about what we do and how to get involved in it. And all that we ask for is your name, your email, your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent the confirmation link. You must click on the confirmation link, okay? If you don't click that link, we don't know that you took the free trial. All right. I just got back to my desk and I saw gold. I just want to get into that. But anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, it's Wednesday, the 24th day of March 2021. Today, we made 10 ticks in crude, 12 ticks in gold, and 30 ticks on the ES. That put us at plus 595 on the morning session. Today, it's 1 minute and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 16 trades. So on the month now, we're up $17,617. That's over 18 trading days, averaging $978 per contract per 2-hour trading day. We've now gone 55 out of 56 days this year and getting our goal. And that puts us at $49,102 per contract per 2-hour trading day on the year. We're averaging $876 per day on the year. Okay. I want to get into gold, but I'm going to save that for last. All right, let's start out with the ES. Okay. On the ES, I had highlighted all these areas at the end of the morning session, areas that I thought it might get to. It got to this one before we finished. Didn't get to that one, didn't get to that one, but it did get to this one right here. Those are areas that I thought it was going to get to during the break. Okay, now we'll go all the way back here and start at the beginning in a minute. There we go. Has to catch up there with the data. All right. So our very first trade of the day was this one right here. You can see we put it on at 9:30.02, and we finished it at 9:30.34. We picked up 8 ticks on the first trade. Then we waited a little while. We got into the second trade. Now on this one, I had highlighted this area down here, but it took me out at break even right here. It did eventually go down there, and I know that some of the guys got the full boat on that one. The next trade was right in here. We picked up another 8 ticks on that, putting us at plus 16. Okay, then we stopped out here, put us back down to plus 8. Then we picked up, what do we got on this? 16 ticks, I think, to put us at plus 24. Then 6 ticks to put us at plus 30. Then we had a break even right in here. I think that was our last trade of the morning session. It was, because we kept hitting this weekly trading zone. But during the break, as I said, I highlighted these areas for it to go to. It didn't go to, it had gone to this one before I shut down for the morning session, but still has to go to those. It did get to that one. And so keep these way back here in mind. Okay. Okay, there's that one at 1 point higher. Yeah, well, you won't be able to see it, but anyway, there's that. Now, crude was pretty good today. We did have one stop out. Let's go all the way back here. Okay, so there was an opportunity here that we missed, an opportunity here that we missed, one here that we got when we get on that 2 ticks. Okay, then one there that we missed. On this one, it looks like we got 14 ticks to put us at plus 16. Then we stopped out, put us back down to plus 8. Then we picked up 2 ticks there to put us at plus 10. We had a break even, missed a trade. A long break even right there. And that was it. Now the numbers I gave on crude, there was this one. right here, 60.59, which we hit to the tick right there during the session. And I thought I gave another one that was higher than that. But nevertheless, I gave this one on the downside. And let's see if we extend this. It was what, 60.20? 60, wasn't it 60.60 and 60.20 were my numbers? And I don't see where the 60.60 is, but I had the 60.59. Maybe that's what I was mixing up. I don't know. It seems like there were some numbers that I kept saying over and over again this morning. 60.20 was one of them, and we haven't gotten there yet. But during the break here on crude, there was a lot of chop right in here. Then there was a shorting opportunity there. And along there. And that was about it. Okay, now the gold. During the break, obviously, there was some opportunity right here in the gold. And you see all these little pullbacks down here? Those are all trade setups. But at the end of the morning session, we really didn't have a lot of room for me to put spaces in for it to get to. So these were the two areas that I had put that it should probably get to. Now, our first trade on gold was right in here, and we picked up 10 ticks on that one. We picked up 2 ticks here to put us at plus 12. We had a break even there and a break even there. So we didn't do a lot of trading on gold today, which is unusual for us, but it was pretty congested. See, we didn't miss a bunch of trades. We missed one there. Both would have been break even trades. And then it finally took off. It finally broke out of its shell here. And this was during the break. There was a long trade there, and there. And so there was a ton of opportunity during the break to take advantage of this leg up. Now, had we been in it, from say down here, I would have been giving you numbers as it was moving up. I would have been giving you numbers, and you could have just trailed your stop and probably stayed in it most of the way up. This happens sometimes, and when I'm reading the DOM to you, if you're in a meeting with me and I'm reading the DOM to you as it's happening, you can just see it coming. Yesterday I was in a meeting with Ray, and it was happening with the ES and it was happening with the YM. Now I was watching both, and he was just watching the ES, and he was actually doing it with me and pointing out areas where it should go to next, and where it should go to next, and where it should go to next, and it did every time. All right, but anyway, it started out kind of a slow morning, but it ended up being kind of exciting. So back to the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 24th day of March, 2021. We picked up 10 on crude, 12 on gold, 30 on the ES. Put us at plus 595 on the morning session. Today took a minute and a trade to get to the goal for the day. And we took 16 trades this morning. So on the month now, we're at $16,617. It's over 18 trading days, averaging $978 per contract per 2-hour trading day. We've gotten our goal 55 out of 56 days. And that puts us at $49,102 per contract per 2-hour trading day. It's over 56 days, averaging on the year now, $876 per contract per 2-hour trading day. Now, I say that per contract per 2-hour trading day. I don't know if anybody really listens to it, but that's one contract, $876 every single day. That's an average. If you just go and look at the days, you see that a lot of the days it's a lot more than that on the morning session. And again, that's one contract, 2 hours a day. So if you're not doing it, I don't know why. Even if you're not doing it with us, if you're not using our indicators and our trade setups and our help, should be doing it somewhere. All right. So anyway, if you've not taken a free trial with us, go to the homepage at cfrn.net. Right here it says free 5-day trial, no credit card required. Click on that. Then you'll be brought right in here. EminiTrainingSchool.com. On this page, all we ask for is your name, your email, your phone number. Tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must listen to you must click on the confirmation link. Okay, if you don't click the confirmation link, you won't get a free trial because we don't know you took the trial until you click that link. And if you listen to the link, well, you're going to be there a long time because, well, it's not going to tell you anything. You got to click on it. And Jake, just get in touch with us. Let us know what's holding you up, and we'll work something out. Here, I'll give you my cell number. You call me. Well, it's no big secret. Anyway, okay, so I have shown you how to take the free trial, and I've shown you the spreadsheet again. I've shown you all the trade setups that we had this morning. There's one setting up on gold right now. The downside on gold, you're looking at 35.2. The upside, which is not stronger, you're looking at 36.4, maybe 37. The charts are suggesting it's going to go down. If it does go down, it's probably not going to be a big move down, but it does need to retrace this. So it could start the move down for the retracement, and it could go all the way down here to like 33.2. All right, and with that, I'll pass back out to studio in fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I am ready. Recap of the recap.
Today it took 1 minute and one trade to get to the goal for the day. And at that point, we're up $100 a contract.
Good job.
Thank you.
Once again, good job. Okay, Logic 247. This is our around-the-clock E-mini alert service. Now, I call it the E-mini alert service, but as you know, we cover gold, and we cover silver, and we cover crude, and of course, all the E-minis. Now, the alert channel opens Sunday night at 6 p.m. Eastern. Traders tend to think of trading as a 9:30 to 4, Monday through Friday kind of a deal, but thanks to futures, thanks to the Globex markets, we see it as an around-the-clock business. The markets open Sunday night, 6 p.m. Eastern, and they remain open until Friday afternoon at 5 p.m. Eastern, with the exception of a 1-hour break from 5 p.m. to 6 p.m. Eastern, Monday through Thursday. So today, as we know, is the Wednesday session. The Wednesday session will end at 5 p.m. Eastern today. The Thursday session, even though it's still Wednesday, Thursday session starts tonight, Wednesday night at 6 p.m. Eastern. And just so everybody understands, futures track the buying and selling of stocks, not the other way around. In fact, just the name itself, futures as in the future. Perhaps futures are indicating where stocks are going to go. No. Futures show you where stocks have been or are. In other words, Monday morning, when traders on Wall Street start, well, no, let's back up. Sunday night, Globex opens, and then Asia opens. And so Asia has its own version of Wall Street somewhere, I guess in Hong Kong. Traders there start buying and selling stocks. Some are buying Tesla, and some are selling Microsoft, and all of that. Okay, there's 500 large cap companies that make up the S&P 500. Now, you can't trade the index itself. So man created derivatives like futures, options, so that you can trade the index. So as traders start buying and selling stocks in Asia, the futures, the S&P E-mini 500 futures contract, tracks the buying and selling of stocks. Now, a question came up, I think it was in the workshop Thursday night. It was a really good question. How is the price of the index, how does that relate to the stocks? And the whole question was about, what came first, the stocks or the futures? Well, the stocks came first, and the futures track the stocks. Now, if you took every company in the S&P 500, if you took the price of every S&P 500 company, added it up, and divided it by 500, that would give you the current price of the S&P 500 E-mini. Okay? So, futures are tracking the buying and selling of stocks in the Asia session. And then at 3 a.m. Eastern, London opens. So now you've got traders in the UK buying and selling stocks, just like we do here in America on Wall Street. Okay. In London, there is a city inside of a city. It's called London City. That's their version of Wall Street. And so as the UK traders are buying and selling stocks, buying Tesla, selling Microsoft, whatever the case may be, the S&P 500 index is tracking that movement. And then, of course, Wall Street opens at 9:30 a.m. Eastern. That's when U.S. stock traders go to work, buying and selling. And the futures continue to track that right up until 5 p.m. Eastern today, which will end the Wednesday session. At 6 p.m. Eastern, we'll begin the Thursday session. Now, the Logic 247 alerts, they're called that, number one, because there's no mystery, no mysticism, no secrets. Everything we do, everything we teach is based on logic. Now, once you understand how price flows, that logic just kind of becomes common sense. But we call it logic. It sounds more sophisticated. And the alerts come out around the clock, 24/7. Hence the name Logic 247. Okay. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 45 alerts. 9 never triggered. Still waiting on the results of 3. That means we have 32 actionable alerts, 32 alerts that actually triggered. Out of those 32, 16% have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a simple 3-step method we teach all of our traders. In the live training room every day, Michael teaches you the importance of always having a physical hard stop on every trade, on every market. To keep things simple, we use an 8-tick hard stop on every market, on every trade. Just 8 ticks across the board. Now, 8 ticks on the S&P is $100. 8 ticks on the Dow would be $40. 8 ticks on crude or gold would be $80. Okay, it's just a flat 8-tick hard stop on everything. The alerts don't use a range chart. In the morning, we use a fast-paced range chart so that Michael can show you multiple trades across multiple markets. Boom, 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 boom. The alerts, on the other hand, are based off of a 30-minute chart. And so on the 30-minute chart, we embrace market structure to tell us where to put our stop loss. We have a 3-step method where we query the chart, and the chart tells us if our entry's here, our stop needs to be here. Each stop loss is unique. It's not based on a formula or a percentage of the ATR or any of the other ways that people might determine a stop loss. We actually ask the chart, if I'm entering here, where does my stop need to be? If it's more than $300, you go to step 2. And if it's still more than $300, you go to step 3. And if it's still more than $300, you pass. Wait for the next trigger. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. Now, of these 32 actionable, okay, a very large percentage of those triggered multiple times. However, we only track the initial trigger. In the beginning, I was very naive, and 138 weeks ago, I thought I could track them all, and, well, I couldn't. So, what happens an awful lot of the time is if that first trigger ends up being a stop out, as I said, once triggered, there's a greater probability of an alert triggering again, and maybe even again. Quite often on that second trigger, it will actually run to the target, okay? But we don't count that. We just count the initial. So whether it's a stop out or run to the trigger, whatever that first trigger is, that's what Valerie recaps for us. So again, with the alerts, maximum risk $300, but less when possible if market structure allows it. The alerts themselves look like this. NQ short 12,978, initial target 968, weekly trading zone 956/57. On a short trade, the final target is always the weekly zone below. On a long, it's always the weekly zone above, like here, crude oil. B is buy, T is initial target. The initial target is designed to give you that $100 per contract per trade, that daily goal that a lot of our traders have. And then often you'll see 2, 3, 4 targets. On a long, they're called potential resistance. On a short, potential support. But the final trade to target will be that weekly zone above on a long. And we're up to alert number 6,960 so far, okay, over the last 138 weeks. When you see a red X, that means it was stopped out based on that $300 risk profile. There's a long on the S&P, initial target, second target, third target, final trade to target. When you see the Z's, that means it just never triggered. Price ran the other way. There's a short on gold, still waiting. No trigger on silver. Short on the NQ, short on the Russell, short on the Dow, short on the S&P. Stop out on silver. No trigger on crude. Short on the NQ, short on the Russell, short on the S&P, short on silver. No trigger. Z's, no trigger. Short on crude, no trigger. Stop out on the Russell. Short on the Dow. Long on the S&P. Long on the S&P. Long on gold. Long on the S&P. A stop out on silver. Long on the NQ. No trigger. Long on the S&P. No trigger here on crude oil. And that takes us back to Sunday night. Short on the S&P. Short on gold. Long on gold. Okay, this was a hedge. The market was in a position where it could just go either way. And as futures traders, we don't care if it goes up or goes down. We just need it to go somewhere, anywhere, other than sideways. Sideways is where most traders lose most of their money, attempting to trade a market that has no real direction. Okay, and so the long side triggered and the short side triggered. I'm sorry, the long side triggered and stopped out. The short side triggered, ran to the target. Here is a long on the NQ. Now this is all Sunday night. Remember, most of the world's still waiting for Monday morning. Short on silver, short on crude, no trigger on the NQ, short on the Russell, short on the Dow. And the first alert this week was a short on the S&P. And we had a carryover from last week. And so I just showed you everything that's happened this week, week 138. Last week, week 137. We had a total of 68 alerts, 11 never triggered, 1 carried over, 56 actionable, 13% stopped out based on a $300 risk profile, less when possible, using market structure. But that's not a typical number. On an average week, we'll see 20% of the alerts get stopped out. We have another type of alert. Okay, now those alerts were based on current price action. The concierge trade alerts are based on historic price action. This is a static report published shortly after the Globex open. So last night, market opened at 6, got the report out at 6:30. These numbers are good for the entire session. The idea is that you go to your chart, you put 2 lines in the sand. Once this is posted, If price starts moving up towards 39.27, that's bullish. And so logic is going to start looking for opportunities to buy the market. Once we get above 39.27, that line in the sand, then we're only looking for higher prices. We're only looking for opportunities to buy the pullback. If price, after we post this, starts dropping to 38.80, that's bearish. And so logic will be looking for opportunities to short the market, sell the rallies, and if price drops below 38.80, we're definitely only looking for trades on the short side. So if you want to grab a screenshot, 5, 4, 3, 2, 1, we'll go to the charts. Okay. We'll start out as we do with a daily chart of the S&P. Okay, let me refresh it. If you leave your charts running all the time, when you sit down to trade, look at your daily chart first and refresh it. Okay, so we talked about this bearish engulfing a lot. If you missed the show on February 16th or the 17th or the 18th, we identified this outside day because of the context as a bearish engulfing candle. Without the proper context, which is a substantial up move, this would just be an outside day. But because of the context, it's actually a bearish engulfing candlestick pattern. There's over 200 different candlestick patterns. Reading candlesticks, or the whole candlestick idea, was created over 400 years ago by Japanese rice traders, so it's not the new thing to come down the pike. You've seen them forever. Now, a candlestick is this. It is a graphic representation of investor or trader sentiment for the market and the time frame being observed. Price flows on a daily chart the same way it flows on a 1-minute chart. From support to resistance, back to support, back to resistance, back to support, over and over, again and again. It's a never-ending cycle. 1-month chart, a 1-minute chart, a daily chart, a weekly chart, a volume chart, a range chart. That's how price flows. Once you can get your brain wrapped around that, you are making huge progress, because then you'll start to understand how we use multiple time frames. Now, we start with the daily here because that's going to give us the most important information. That's going to show us where major support and major resistance is. Our weekly trading zones, which are published every Monday morning at 6:15 a.m. Eastern for our members. We've been publishing those since December 14th of 2009. Those should be looked at as fixed support and resistance for the entire week, because once we publish them Monday morning, they don't change for the entire week. Fixed support and resistance. The indicators provide you with dynamic support and resistance. And really, that's all you need, because price flows from support to resistance, back to support, back to resistance, over and over, again and again, never-ending cycle. So just understanding that, and I don't mean just head knowledge, but when that concept, when that idea, when that understanding is written on the tablet of your heart, you're well on your way to learning how to trade. Now, this bearish engulfing led to this retracement, but price rarely travels in a straight line. So bearish engulfing set this move in motion, and when we hit the BBC, we spiked it on this day, we spiked it on this day, and we spiked it on this day. But on both days, we closed above it. Now, the green line, we call it the BBC, just stands for bull bear cross. That's it. When price is above it, we're bullish. We expect the pullback to hold until proven otherwise. When price is below, we're bearish, looking for lower prices. Everything we do is very simple. everything I'm telling you about this daily chart of the S&P, I would tell you the same thing about crude oil on a 1-minute chart. But the larger the time frame, the more important the information is. Now, yesterday we had an inside day. Okay, remember, this is an outside day. This was a bearish engulfing candle, which sent us down to the BBC, just like it did over here. And over here we found support, and that support ran us up to the other indicator. It's called the CFMA1. I refer to it as blue and climbing, bullish, red and falling, bearish. So when price ran into red and falling, it drove price back down to close this time below the BBC. Buyers found support, took us back up to red and falling took us back down to the next level of support. And so here, from this bearish engulfing to the BBC, it took 1, 2, 3. It took 4 trading days after the bearish engulfing to get back to the BBC. In this instance, it's a little bit different. Market structure is different. We have a bearish engulfing, but it only took 1 day because already the BBC was closer to the close. See, this was the close. We got all this space to the BBC, but we closed here, and the next day, bang, we hit the BBC, which we expect to be good support until proven otherwise. Okay, that support sent us looking for resistance, which we found at the step line. We talked about this yesterday, the day before. If you missed the shows, you can go to the YouTube channel and watch it. Resistance sent us back looking for support again. Remember, when price drops to the BBC, we expect it to be good support. Like this, and like this. Resistance sent us looking for support. We found it. We've now traded above the step line. So the next area for major resistance is going to be yesterday's high. So you might want to write these numbers down. Now, anything above today's high, obviously, which is 39.31 half. Okay, that's your first major resistance. Yesterday's high, 39.3875. That's your next major resistance. Then the previous day's high, 39.44 half. That's the next area where we expect resistance. And if we can take out today's high, yesterday's high, Monday's high, then we're going to run into blue and climbing, except blue's not really climbing anymore. Have a look over here. Okay. See how price is to the left of blue and climbing? Okay. But then price starts to do something different. It stops climbing. And our blue and climbing turns into red and falling, which we just explained was good resistance on the way down. If we were to close right here, right now, and print another candle, and when this next session opens, this could become red falling on the next candle. Might take 2 days, but the session's not over. We've still got a number of hours yet left to trade up until 5 p.m. Eastern today. So potential resistance, major resistance. Now you want to check and see if any of those areas coincide with a weekly trading zone. Okay, this high, 31 half. Nope. Next high, 38.75. Nope. Next high, 39.44 half. Blue and sideways is 39.51. We have a weekly trading zone at 39.50/51. So high probability from here is that buyers are going to try to take out today's high, yesterday's high, Monday's high. Now, those are all areas where the market could easily find resistance, okay? Because the question we're asking ourselves right now, is this a leg, a retracement, and a continuation of the leg to the upside, or have the tables been turned? Leg, retracement, and this is the beginning. Even though we're putting a green candle today, we have to embrace the potential that leg, retrace, this could be a leg to the downside, okay? Now, the reason we found support here, there's quite a few. Obviously, the daily BBC, but we also have a 38% fib extension, 38% fib retracement, 24% fib extension. We've got this bullish cross. When price returns to a previously untested bullish cross, we expect that to be good support. So we got like 4 different reasons, and plus the low of this day. So we got 1, 2, 3, 4. I got 5 reasons why and if you go back to this day's show, the 19th, you'll hear us talking about these 5 reasons before it happened. See, we're not the woulda, coulda, shoulda guys. We deal with live markets, real time, and so I gave you all those reasons back on this day, which led to this. And we talked about the potential resistance at the step line, which we got. Now we're slightly above the step line, okay? And so, now, price is always on the move. Price, from the moment the market's open to the market's closed for the week, price is on the move, and price is always trying to get to a weekly trading zone. Either the zone above or the zone below. Once you understand that, and you go to the smaller time frame chart, like we're going to do right now, our next zone overhead is 3950/51. Okay. Now, this zone 22/23 was just above this bearish cross. And so on the way up, we expect that bearish cross to be resistance until proven otherwise. And I think we can agree that it was. These are 30-minute candles. It was, and then hours later it was, and then an hour later it was, and then 30 minutes later it was. And then we spiked it and came right back. And then we spiked. We got some traction, okay? We had a logic alert. 39.31 was the initial trade to target, okay, with the initial target. We hit 31.5, okay? Price then comes back down. And so what happens here is important. We could just consolidate sideways. If we do, slowly the BBC is going to work its way up. Now, the BBC rising to meet price is different than price dropping to the BBC. It creates a different dynamic. However, price and the BBC will eventually meet up, whether it's down here or right here at the zone, whatever the case. Okay. Now, we have obstacles. If, let's say, the next candle starts to print green, okay, high of the session, 31.5, we know that's initial resistance. And then these highs, potential resistance. This high, potential resistance, weekly zone. As long as price stays above the BBC on the 30-minute, then we believe that price is trying to get to the next zone overhead. When price gets below the BBC, then we believe price is trying to get to the zone below. And it did. You see this drop here? We got below the BBC. We got below this weekly zone. And so we know price is trying to get to the zone below. And it did. It spiked it, but the zone held for quite a number of hours, from 3:30 or 3 o'clock, 2:30 yesterday afternoon. No, 3 o'clock yesterday afternoon. Really until about 5 a.m. this morning. We finally broke away. We closed above the BBC. So see, here we're expecting lower prices, but we know we've got support right here. So it's very difficult to trade in this area. Once this candle, 4 a.m. Eastern this morning, London opens at 3 a.m. Eastern. Okay. Once we get a close above the BBC, now we know we're trying to get to the zone overhead. We consolidated at a zone from last week for quite a period of time, and we had this resistance created by the bearish cross. Okay, but we finally made it to the zone, and we've been consolidating now for 2.5 hours. There's 9 minutes left in the life of this candle. So if price comes down and touches the BBC, will there be enough room for us to put out an alert to get us back up to this zone? I don't know. We have to wait and see. We don't know the future. We don't try to fool you into thinking we know the future, because that would be foolish. Because eventually you'd figure out that we really don't know what's going to happen next. But we just tell you that up front. No clever ad copy to convince you otherwise. We don't. What we do know, based on logic or common sense, is what the next high probability move is. Right now, the high probability move is down to the BBC. Why? Because we're printing a red candle. And that's the logical place that the market will find support. Now, look at all the hours that we consolidated here. Okay, that's another reason this area will most likely be good support. After all the hours of consolidation, storing up energy, this is as far as we could go. That's shows a little bit of weakness, right? Now, so why aren't we shorting this down to the BBC if that's where we think it's going? Well, you can, but every alert in the channel, there's almost 7,000 of them now in the logic channel. Every one of those is a trend trade as defined by the BBC on a 30-minute chart. No counter trend trades in the bunch. There's nothing wrong with counter trend trades. They're not illegal, immoral, or fattening. However, experience has shown me that there is a greater probability, a higher probability with a trend trade than with a counter trend trade. So the fact that we have almost 7,000 alerts in the channel, if I were embracing both trend and counter trend, we might have 14,000. Okay. So as you learn the methodology and as you learn the strategy, you'll decide if you want to participate in counter trend trades or not. Just know that every alert in the channel will be, because we believe that old saying, the trend is your friend till it ends. Okay. By having the wind at our back, not tugging on Superman's cape or spitting in the wind, as the lyrics go, it creates a higher probability, low risk environment. Now, it does require that you have to be patient. Patience and self-discipline are two things we cannot give you. We can encourage you, we can pray for you, we can meditate with you, but you have to dig. We give you the knowledge, we give you the tools, but you have to dig down inside of yourself and find the patience factor and the self-discipline factor. Most of us, all of our life, most people have had jobs, and jobs come with bosses. And so most of our life has been spent with somebody else telling us what to do and when to do it. I need you to take lunch an hour later today because this project needs to get finished. Okay, boss. When you become a trader, there's nobody telling you. Now, that's why so many people flock to so many advisory services and whatnot, alerts, because they've spent their whole life being told what to do and when to do it. They want to get back into that comfort zone. They want the upside that trading represents, unlimited earning potential. But they don't have to make the decision. They don't have to call the shot. So I'm glad there are all these other services out there for those kinds of people. Those are not who our students are. Our students are people who want to learn how to trade without the intervention of anyone else. They want to actually know when to get in and when to get out based upon their understanding of how markets work. Not some guru who may be grumpy today or hungover today or whatever the case may be, and so the info you get may not be so swell. Once you understand how price flows and you learn where to anticipate resistance, okay, and support, then the alerts, when an alert goes out, it makes the telegram sound on your phone, tablet, PC, Mac. It's not a call to trade, it's a call to go look at your chart. Because a window of opportunity has just presented itself. So you should go and study that chart. Understand why it's a window of opportunity. Okay? And then as it triggers, trade it. In the simulator, when you join up with us, we do not want you trading real money right away. You haven't learned the strategy yet. You haven't learned the methodology yet. We do not want you to just blindly trade the alerts because they do so well. We want you to use them as a stepping stone to learning how to find these opportunities on your own. Okay? That's the end goal. Our product is not the alerts. Our product is teaching you how to find these windows of opportunity yourself. And the more times you trade an alert in Sim over and over again and again, because the methodology and the strategy and the indicators never change, pretty soon, instead of being an alert, when that phone makes the telegram sound, it's more of a confirmation. Oh, I knew he was going to send that alert out. Because now you're starting to see it too. Now, I drew a humble trend line the other day, and I connected, what did I connect? That high to that high to that high. Now, I'm going to double click this trend line. I'm not going to move it. I'm just going to double click it. And right here where it says finite, I'm going to change, and watch what happens to the line when I switch it to ray. Extends it out to the right, but it doesn't affect the angle in any way. Okay? So, we touched the trend line, we touched the trend line. Oh, we came so close to touching the trend line. And we came so close again. Now, if I highlight that and go Control C on my keyboard, left click, Control V, I now have another trend line at exactly the same angle. Make sure you grab that trend line in the middle. So if you grab it by the end, you're going to change the angle. So we want to see if we have a price channel developing. Now, I would have to, I'd have to make this, instead of a ray, I got to make it infinite because I need it to go back to the left. See what it just did? Okay. And so, way back here, not in love with it. Okay. So we've touched the bottom twice, but I mean, you can see. Sometimes it's just really there. Other times it's just not. Okay. But that doesn't mean this trend line overhead doesn't have value, even though we don't have a great price channel, because we've really only truly touched the bottom once here. Yeah, well, you see it. Okay? All right. So, on the way back up, if buyers come in and try to run this thing, they got to overcome a lot of obstacles, and this trend line being one of them. Okay? Now, the CTA last night for the S&P was to be long at or above 39.27. And while we did trade above it, we hit 31.5, so 4.5 points. This was to buy 39.27, and we had I think we had a logic alert at the, I think the logic alert was at 29. Okay. Now, the CTA, remember, it's guidance for the entire session. Numbers are good for the entire session. This, Mike Reed called it a prairie dog. I used to call it the up periscope. It's where price sticks its head up above an important price, important area, looks around, doesn't like what it sees, and heads in the other direction. Okay, it's a good example. Now again, from 27 to 31, that's 4.5 points, so there's nothing wrong with that. Okay, but really what happened is price got rejected here. The short line in the sand is at 38.80. That's way down here. $38.80. Okay, price is sitting right now, top of the BBC. We'll get a new candle in 29 minutes. Okay, if price continues to drop, here's potential support. And then if it continues to drop, where this bullish cross took place, that's potential support. If price can get below that, then we have a window of opportunity down to the zone. Okay, could be something along the lines of 39.01 to 38.98. You know, 2-3 point window of opportunity. That's just all the room we have, and we have to expect this to be good support, because look at it. For hours, buyers and sellers were duking it out, and then finally the buyers got the upper hand to resistance, back to support. So we're moving below the BBC. Now once we get below the BBC, we start thinking about being short the market. Okay. However, if I've got potential support here and here, those are some pretty tight quarters. So I'm going to pass, because if I get through this and this, then I got to deal with this. So I would only be comfortable putting out an alert in this scenario down here. If we were to get back up to 39.28, up to 39.30, up to 39.36, 37, 44, 45, 50, 51. Okay. Trading is not easy, but it can be that simple. Once you understand how price flows, how to read price, how to read the chart, how to use the indicators. Okay. You understand that, we give you the concierge alerts, we give you the logic alerts, with the goal being not that you just learn how to trade the alerts, but that you learn how to discover the alerts, the windows of opportunity, like I just did right here. Okay, so you're telling me that you're not interested in trading until price gets down here or up here. Correct. Well, but I want to put on a trade now. Okay, then you're going to have to go look at a different market, or you're going to have to be patient and exercise self-discipline. But I only trade the S&P. Okay. Take a walk, pet the dog, make a sandwich, do whatever it is you do. Okay. In fact, it's not a bad idea. If trading is one of your income streams, because the Bible says we should have multiple income streams. If trading is one of your income streams, then whatever one of your other income streams is, have some of that work on your desk to occupy your mind and your hands till until the trade comes to you. Okay? We don't chase trades. We wait for the market to come to us. We know we would want to be short here. We know we would want to be long here. And from the S&P based on the S&P, there's nothing else to do. Okay, we can sit here and stare at it, but beware of negative screen time. Okay, if the time you spend in front of the screen is not benefiting you in some way, focus on something else. Okay. Okay, so we know we got to wait this out. We did have a trigger on the long CTA. Let's go to the Dow. And there's the Dow. And I think these are all current weekly zones. I think we did all that yesterday. What's price trying to do? Trying to pull back to the BBC, just like the S&P. The S&P already got there. Now, is this a beautiful counter trend opportunity? Yeah, it is. But for the reasons I just mentioned, I won't publish it because every of the almost 7,000 alerts in the channel, they're all trend trades. And that just simply means price is above the BBC, it's going to be a long alert. Price is below the BBC, it's going to be a short alert with the trend. We got a downtrend, we got an uptrend. Downtrend, uptrend. Downtrend, uptrend. Now, if price drops, you see this bearish cross right here. On the way up, it stalled price for a bit, but not long. Okay. All right. So now price is dropping to the BBC. So when it gets there, we expect it to be good support. If it is good support, we will then have an opportunity to trade long back up to that zone. If it fails to be good support and we get a close below the BBC, then we'll have a nice opportunity to short back down to this zone, which we expect to be good support, and this as of yet untested bullish cross. If price gets back here, we expect that to be good support. Okay, so again, because we're not going to take the counter trend trade, we just have to be patient. Let price meet up with the BBC. Price always reverts to the mean. In our case, the mean is just happens to be green. Okay. So now imagine lots of traders are seeing this action here, and they're like, "Oh yeah, we got a one, we got a double top here, whatever, however you want to label it. I'm going to get short." What they don't know is that they're going to potentially run into support here. We're going to let price get below that before we initiate an alert, which would then take us down to the zone. But if we find support, now support could mean we touch it and bounce. It could mean we touch it and consolidate for however many candles it takes, and then buyers kick in and drive us back to this zone. Because this potential spot of meeting up is like right between these two zones, whichever way it goes, whether it holds or it doesn't, should give us a pretty fair trading opportunity. I don't know if you guys just noticed that my screen just sort of dimmed a little bit. I've been noticing that a lot lately, and I don't know, this 55 inches of digital madness I have hanging on the wall, I've had this one 3-4 years, I think. I don't know if that means the graphics card might be going out or just the TV, because the computer runs 24/7. The monitor's always on. For me, it's a monitor. For some people, it's a flat screen TV. For me, it's a monitor. I can see it across the room without my glasses, which is a good thing. The monitors on my desktop, I need glasses to see those. And so, either way, and if anyone knows the answer to that question, oh, Michael R. said a power issue. Well, yeah, that's possible. Michael, I don't know. But I'll add that to my list of things to investigate. The good news is if it's just the monitor, I've got a Walmart. It's a 10-minute drive, and in an hour I could be at Walmart and be back home hanging, which is a bit of a job, hanging a new flat screen on the wall. I think I would rather it be the monitor than the video card or the power supply. Well, the power supply and the computer wouldn't affect that. So, but you've given me something else to think about, so thank you. All right, CTA numbers 32,545 on the long side. 32,545, which is right about where we are right now. By 32,545. Now, important prices, important areas are almost always tested. So, we ran up to the zone overhead, 32,590. So that's 45 points at $5 a point. And then price got back below the trigger, and it did it again. This time it took us all the way up to 32,650. So that's almost 100 points at $5 a point, $500 per contract traded. Now we're back below the trigger again. Okay. If we find support here, or anywhere in between, there's one trigger, two trigger, we may have a third trigger. Some days we see 4 or 5 triggers. The short side, 3880. No. 32,290. 32,290. All right. So we had a little, what was the swing low here? 883. So we just barely tripped over the line. Got back. Second trigger. Now, red and falling is what we want on a short trade. But on this trigger, you got blue and sideways there. And so while this represents lower prices, it's bearish, it's resistance. When it gets directly below price, like it did here, it can become support. So then we get back above the trigger, we do it again. So we have like 1, 2, 3 triggers, but because of this, they're not really appealing. Not all triggers are created equal. It'll be interesting to see what happens here, and if we do get another trigger on the long side. Okay, Russell. Last night on the Russell, the long side was 22.34, which we haven't reached. The short side, 21.77. Which right here, 2177. Okay, so from 2177 we dropped to 2171. So that's a 6-point drop at $50 a point. It's $300 per contract traded. Price gets back above the trigger, drops again. This time you got blue and climbing below. Not all triggers created equal. Now we're below the BBC. We've gotten through this bullish cross. Now you see how when this candle came down and hit that bullish cross area, it bounced, but not much. So buyers really have, sellers really have the upper hand here. So here we sit right on top of the trigger again. Exactly. 2177. Now, if you trade this, you've got to expect or anticipate support being right there. Is that sufficient? Well, from 21.77 to 21.73, that's 4 points at $50 a point. It's $200 per contract traded. On the NQ, the long side last night was 13.094. $13.094 to 13.145. So from 94 to 45, we'll call it 50 points at $20 a point. It's $1,000 per contract traded. Now the short line in the sand was 13.017. And so we dropped to the zone below. So that's 50 points, roughly, 20 bucks a point. That's $1,000 per contract traded. Price gets back above the trigger. See, it dropped to the zone and found support. Support sent it looking for resistance, which it found at the zone. When price rises to a zone, we expect that to be resistance. Just like when it drops to a zone, we expect it to be support. Okay. Now, only 3 things happen at a weekly trading zone. The most common is consolidation. It's about 75% of the time. The second most likely thing is rejection, where when the candle closes, the only thing left touching the zone is the wick. The third and least likely, but it happens, is the slice. Price sliced through the zone like it wasn't even there. When that happens, when a slice runs out of steam, it will typically retrace to the zone it sliced through. See this big red candle sliced through that zone. It then ran out of steam. It retraced to the zone it sliced through, and then continued in the direction of the slice. And so now we've gone from 13.017 down to about 130, 140 points, $20 a point. That's me doing public math without a calculator. So if I got it wrong, you figure it out. Guys, you see that? My screen went dim, then it came bright again. Yep. Well, at least I have a heads up, so whatever the trouble is. Now, this low, see this low here? That's potential support. If it can get through this area, the next area for potential support is right there. Is this a tradable window of opportunity? I say it is. From about 12.860 to 12.840. That's 20 points. At $20 a point, that would be $400 per contract traded. Okay, but price has to first overcome the support. See the bounce? That's what we expect. That's what we anticipate, because that's how price works. It's how price flows. Okay. Next on the list is crude oil. Okay. Last night, the long side for crude, CTA 59.05. Okay, 59.05 up to the zone overhead. That's 40 points or $400 per contract traded. Important prices, important areas, almost always tested. So price triggers, hits resistance, gets back below the trigger, triggers again, and this time it takes us from 59.05 to, well, from 59.05 to 61.05. That's a $1 move. That's worth $1,000 bucks. A $1 move in crude, and the price of crude is worth $1,000 bucks. A $1 move in gold is $100 bucks. A $1 move in silver is $5 grand with the large contract. Now, you see this bearish cross here that led to this beautiful down leg? Over and over, again and again. Fixed support and resistance, dynamic support and resistance. As you learn to understand that price flows from one to the other, back again to the other, and back again, and back again, in a never-ending cycle, it's like the dance floor is full. Everybody's doing like one of them line dances or something, okay? And so all you got to do is stand there and listen for a minute. You may need a couple of adult beverages first, I don't know. But you hear the music, you tap your toe, you hear the beat, and then 1 and a 2 and a 1 and a 2, and boom, you're doing the electric slide right along with everybody else. Right? Yes, that was me dancing here in the studio all alone. But I can't do the electric slide. I can do this electric slide, but not that one. Okay? If you understand the moves, then you just got to find the rhythm of the market, which our indicators help you do. Leg down, 2, 3, 4. Leg up, 2, 3, 4. Leg down, 2, 3, 4. It's become a dance class, a music class. It's about the rhythm of the market. Can you hear it? Can you see it? Can you feel it? And do you know the steps? If you don't, you should beat feet over here to eminifuturestrading.com. I will literally start teaching you this afternoon. It's a true story. Go there, get your passport. Now, once you buy this passport, you will never again need to buy any more trading stuff. Period. No disclaimer. Once you buy the passport, you will never again have to buy any more trading stuff. And I'm doing air quotes when I say stuff. Because you will have everything you need to learn how to trade. No more expensive indicators or oscillators or algorithms. Now, there's a world of indicators out there, from the McCastics, from the stochastics to the MACDs. Yeah, I think people who use those might be masochistic, but anyway, no, I think all those indicators do exactly what they were created to do. But they give the illusion of being able to tell the future, which they can't. God didn't create the world that way. Adam was not given the ability to change the past or to know the future. And those two things are inextricably linked for eternity. Okay? So let's get away from the nonsense and let's deal with reality. What is the next high probability move? With our indicators, with our simple strategy, once I teach you how price flows, you too can do the electric slide. eminifuturestrading.com. Now, when you go to check out, there will be no little pop-up about how you're an idiot if you don't buy this upsell to go along with it. Okay? We don't do the stuff that insults your intelligence. I mean, I bought stuff online before. There's like 5 upsells. I'm trying to check out. Okay, well, this is only good for X, but boy, if you just clicked here, then you'd also get Z. Okay, Well, nobody wants to feel like an idiot, so you buy that. And you think you're going to actually check out, and boop, up comes another upsell. And another, and another. And I don't know how many times I've abandoned my shopping cart because I felt so doggone insulted. Because they obviously were going to take me for every penny I was willing to spend. Our passport's $5,000, $49.97 to be exact. But you won't spend another dime with us. No weekly, no monthly, no annual, no new indicator we just discovered that you gotta have. No. We've not changed a line of code in our indicators or a rule to our trading strategy in, I guess, 9 years, maybe 10. I don't know. Now, Michael and I we were the king of indicators and oscillators. We owned everything on the planet. And when there was no more stuff to buy, we started rolling our own. But what we couldn't understand is why we were always one mouse click away from greatness. Man, just one more filter, just one more something, just measure one more. No. We realized we were going in the wrong direction. So instead of adding one more thing, we started getting rid of stuff. Now, it's painful to get rid of an expensive indicator you bought, but it's even more painful to get rid of something that you spent a lot of time creating, coding, all of that, backtesting, blah, blah. But we did it. We were brave. And we kept peeling stuff off till we actually could see price. And once we could see price, we began to understand how price flows. And everything just sort of fell into place. Now, you can go the long way around the mountain like we did, or you can jumpstart and just go here, eminifuturestrading.com. Probably the single most unique thing, other than no upsells, that you get from us is unlimited one-on-one mentoring. Now, we train you as a group every morning for 2 hours in the live training room, every trading day. That's 10 hours a week. And then for 2 hours in the afternoon, Michael does a recap of what happened in the room, and then I walk you through every one of the CTAs, and I look at the logics, and I talk about price and how it moves. So honestly, you're getting 20 hours of group instruction. Thursday nights, we do a members-only workshop, so that's 22 hours of group instruction. And it's not just like you watching a video or something. This is a live class. It's interactive, where you're encouraged to ask as many questions as you want, and we'll give you answers to those questions. Because with each question you ask, you're getting that much closer to understanding the method, the strategy, how price flows, where obstacles come from, what they represent. It's a process. Welcome to the process. eminifuturestrading.com. Never spend another dime on trading stuff. I mean, you can, but it would do you no good, because you'll already have everything you need, because nothing can tell the future. But with our methodology, our strategy, and our indicators, you can always know with certainty what the next high probability move is. S&P. If I'm not mistaken, we just drew this. You were with us a few minutes ago. Did you know on YouTube you can back it up even when it's live? Yeah, I did that just for you. Now, we said if price could get through the BBC, in fact, it was already just a little bit below it, right? And we said if it could take out, this area here where we consolidated for so many hours, that the next area where the market would find support, we said, okay, here's the low. Okay, there's potential support. There's potential support. Big support. Bullish cross. A bullish cross that leads to a substantial move. When price revisits it the first time, it's most likely going to be support. Just like this bearish cross, when price first got back up there, rejected, 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 rejected. Got through it, touched the zone, rejected. got to it again, rejected. Now, does that mean as price drops, we're going to have that many attempts at support? No. I can't say all that. Okay. I can't say that with certainty. But what I did say with certainty just a little bit ago, if price could take out that low and that low, we would most likely find support right here. It's not magic, not mysticism, no dark science, dark arts, and no BS. No BS. We're actually showing you how the whole thing works. Not everybody's crazy about that. Because the more people that we reveal the truth to, the fewer people there are that the other vendors can take advantage of by selling them solutions, selling you solutions to problems that didn't even exist until they created the problem in your mind. Huh. Yeah. We don't play by the quote-unquote vendor rules, right? We're the outcasts because we tell you the truth. And facts change, but truth never does. Think about that. Okay, so now what? Okay, if price can get above the BBC, because we're below it, it's now potential resistance. Then the step line, then red and falling, then the zone. What does this look like on a daily chart now? Remember we were talking earlier about if buyers were committed, they would try to take out this high, and then they would hit blue and climbing and the weekly zone. But buyers did not do that. Buyers have shown weakness. But the session's not over. It's still an inside day. Inside because the high of today is lower than yesterday. The low of today is higher than yesterday. Okay? So price could just bounce around in here for the rest of the session. Something will happen at some point, whether it's today or tonight or tomorrow, that will get this thing cooking on the next leg. And remember the question we asked. Do we have a leg, a retracement, and a continuation of the leg? Or do we have a leg, a retracement, and now we're working on this next leg to the downside? If price can get below this bullish cross, then I'm going to go with we're working on another leg to the downside. Okay. All right. So that's where the S&P is. Looks like it wants to make another run. We'll see. Now, remember I said window of opportunity down here. I said I'm not going to put out an alert on this because of all the obstacles, right? But as you learn the methodology, you learn the strategy, you can decide what you're willing to risk or not. If it's in the alert channel, it is the highest probability, lowest risk that I can find. And when there are no fresh alerts in the channel, it's because the market's tied up in knots. So that was the S&P. I know we already done the Dow. Okay, the Dow, we talked about the Dow reaching down to the BBC. And it bounced right back to the trigger. And then we've already looked at the Russell. Price got back down to that CTA, but we talked about not having a lot of room to run, and it's acting more like an iron curtain now. Cause price to bounce. In Q. Support, support, nice bounce. See how that works? Over and over, again and again, day after day after day. Now the question is okay, we got red and falling, we're printing a red candle. Obviously, price is going to try to challenge this low. That's obvious, that's logical, it's common sense. What could change that? Buyers. You see, price moves not because of somebody's indicator or oscillator or algorithm. Price moves based on order flow. And what's order flow? Order flow is all the buyers and sellers in the marketplace at any given time. Every retail trader, every institution. Okay. If there's more selling pressure than buying pressure, price drops. If there's more buying pressure than selling pressure, price rises. That red candle just turned green by a little bit. That's buyers and sellers duking it out in the DOM right now. Who's going to prevail? Well, sellers seem to have the home court advantage. Wow, I did a sports analogy, I did a dancing analogy, and I did a, we're expanding our horizons. Look at that. Okay, sellers have the upper hand because we've got a bearish crossover head, we got red and falling, we're below the step line, so a little bit of green here. No biggie. Do we have a window of opportunity? Yeah. 12,900 to 12,890. It's a $200 per contract move. I won't put it out as an alert, but you might. Okay, let's get done. Did we already do crude oil? I think we did. Oh, on crude, I think we talked about this resistance here. Yeah. And then the long side was 59.05 right here. And we've run up over $1,000 per contract. The short side for crude, 56.95. Never got tested. Okay. So we only have two markets left. Gold. And silver. Last night's number from gold was 1734. $17.30. So $70. That's all it was. And then important prices, important areas, almost always tested. This time from 34 we ran up to 37. So that's $370 per contract traded. Back below the trigger. And it looks like it wants to trigger again. Last but not least, silver. Oh, and I forgot to publish the silver zone Sunday night, but I put them in the discussion group last night. I put the same numbers that I had computed Sunday night, and when I published them last night, I commented, I think, that we only had one weekly zone left below us on silver. So let's go to the silver chart. Okay, the lowest weekly zone for silver, 24.93. Down here. CTAs last night for silver were 25.48 on the upside, never touched. 24.98 on the short side, never touched. And there you have it. Once again, so far this week, Logic 247, our premier Emini alert service. 45 alerts, 9 never triggered, waiting on 3, 32 actionable, 16% stopped out, based on not risking more than $300 per contract per trade, but less when possible, using market structure and a simple 3-step process we teach all of our traders. If you're ready to get down to business, right? Now, understand, we treat this like a business. It is a business. You need to learn how to treat it like a business. Don't stop taking shots. Stop gambling. If you want to gamble, go to Vegas. They got free adult beverages and entertainment, and we don't have any of that. Okay? The more you treat this like a business, the more it will behave like a business. If you treat it like gambling, you'll get gambling results. End of story. But if you're ready to buckle down and do something different, okay? If you continue to do the same thing you've done in the past, you're going to continue to get the same results. Get beyond the parlor tricks and the magic acts. Learn how price flows. And we'll teach you the electric slide. Valerie will. She does that. She's an electric slide type of person. Okay. Good word for the day. We've been talking for 6 days about dealing with fear. I hope it's helped. But it's so important, we're going to talk about it again. 2 Timothy 1:7. God has not given us a spirit of fear. And somebody said, well, why do I feel so fearful all the time? The whole scripture says, for God gave us a spirit not of fear, but of power and love and self-control. Ooh, self-control? Is that like self-discipline? Yeah, and some translations call it a sound mind. During the American Revolution, Spain gained control of the Bahamas. In April of 1783, Andrew DeVoe, a lieutenant colonel from South Carolina, recruited a handful of militiamen and Harbor Island settlers to retake the capital of the Bahamas using a clever strategy. DeVoe had only 200 men with him, a far smaller force than that of the Spanish, but he managed to capture the high ground on the island after a brief skirmish. The Spaniards then watched as boats reportedly ferried load after load of men from DeVoe's ships to his defensive position on the shore. What the Spaniards didn't know was that the same men kept going back and forth, standing up on their trip over to the island and hiding themselves by lying low in the boat on the trip back to the ships. The leader of the Spanish troops, fearing a defeat from a larger force, surrendered. How clever was that? It looked like hundreds and hundreds of men were coming ashore because a little boat would come in from the big ship loaded with men, and then they would all hide as the seemingly empty boat went back out to the big ship to get another 100 men and ferry them in. Perception is reality. Check your perception. Because his reality, from what he saw with his own eyes, from what he perceived, was that there was more men than his small army could defeat. So he surrendered to a very small army. Imagine the look on his face. He was surprised, to say the least. Now, when you succumb to fear, you're already beaten. People ruled by fear stay where it's safe. And that's sad, because you can't reach your potential by staying where it's safe. Shakespeare said, our doubts are traitors and make us lose what we oft might win by fearing to attempt. What would you attempt in life if you were sure you couldn't fail? Think about that. What would you do differently in life if you were sure, if you knew with certainty that you couldn't fail? Before you answer, read these words of David. Go to your Bible, Psalm 56:9. When I cry out to you, my enemies will turn back. I know because God is for me, not against me. So friend, if you'll believe that God is on your side today, and then step out and attempt the thing you're afraid to do, you'll never be the same again. Life, liberty, and the pursuit of happiness. Liberty will be yours. Believe that God is on your side today, and then step out and do that thing, whatever it is that you're afraid to do. And know that victory is yours, because God is for you, not against you. And that's our good word for the day. EMiniFuturesTrading.com, 949-42 EMini, support at CFRN.net. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.